lot of people will tell you that housing prices have to stop falling sometime soon. Not Michael Carliner. In a Bloomberg op-ed today, he says the housing market won't recover until builders and consumers believe homes are a safe investment again. Michael is a research affiliate at the Harvard University Joint Center for Housing Studies and a former economist for the National Association of Home Builders. He joins us this morning from Washington. Good morning. Thanks for waking up early. Appreciate it.
Good morning.
Okay, a lot of people are looking for some optimism here. Why do you take this stance?
Well, first of all, it's not that I don't think things will stop falling. I think that they will, or will soon, but that I don't think most people believe that yet. And until there's confidence that house prices are going to go up, the attraction of buying a home is reduced. There was a time when people thought house prices couldn't go down, that they were sure to go up, and this caused a bubble. Now we have kind of the opposite of a bubble, and people not believing that housing is a safe investment.
Well, we have tax credits. We have low mortgage rates. What else is it going to take to get people to be optimistic and have that confidence again?
Well, I think you're going to have to see several years' experience of favorable results. We've had house prices start to recover slightly, although that was probably boosted by the tax credit. And as that tax credit has expired, it may push prices down a little bit more. But we also have a glut of supply that needs to be soaked up before the market can really recover.
Well, when you look at the supply, we've had a problem historically of oversupply. Okay. What do you see right now when you look at the market?
Well, first of all, since 2005, about 1.5 million homes, single-family homes, have gone into the rental market. Now, some of those were intended to be rentals, and there were long-term investments. But if the market starts to recover, a lot of those will come back for sale again, and that will compete with any new housing. We also have a near record number of vacant homes for sale. There's a series the Census Bureau puts out of homeowner vacancy rate that's been out. They've been producing since 1956. Between 1956 and 2006, the rate on that never exceeded 2%. It's now 2.5%, and that represents about 500,000 too many homes.
Historically, you've had the housing market rebound to see the economy rebound. It has typically led it out of recession. When can we see that actually happening, or is this just a totally different scenario than anything we've ever seen?
Well, we do have the lowest mortgage rate since 1953, and normally that should be producing a huge boom in housing. I think that will help to get things moving, but I don't think that we'll see a rapid or large recovery.
Obviously a grand opportunity right now. If you have some money to invest, you can buy low, and if you're there to ride out the market. But what advice do you have for people that are just holding off, waiting to buy their first homes right now?
Well, for someone who's going to buy a home to live in, this is a good time. It's a good time because the mortgage rates are low. If you get a fixed-rate mortgage, it'll stay low. You'll probably get a better house now. A few years ago, people were, builders were scratching the bottom of the barrel for labor and materials to build houses. Now you'll get better material and better labor going into building the house. So it's a good time to buy, but it's not necessarily a good time to speculate.